So I'm very excited to have Adrian, Edith, Tobias, Suhul, and Alex here. They'll introduce themselves in a second, and we're going to talk about project origination. So what we're going to cover is, of course, what do we mean by project origination? Where in the value chain are we talking about project origination? What challenges do we have? How do we originate projects? What kind of partners? What kind of aspects are we looking at? So my name is Lorenzo Mandias from Shell, the nature-based solutions team. We've set up this part of the business about 5 years ago, and over these years grown from a handful of people to more than 100 people across the globe, covering all the different regions and investing and originating and developing nature-based projects. So very excited to have the panel. I'll give you about a minute, 30 seconds to introduce yourself, and I'll dive straight into it.
Yeah, thanks, Lorenzo. My name is Alex Buskey, and I'm with Flow Carbon. I have a background in wildlife conservation with smaller land trusts and other organizations, and I'm here today with Flow Carbon, who's building a platform for buying and selling carbon credits and maybe biodiversity credits in the future. And so we're bringing a platform that's going to enable this a little bit more transparently, more efficiently, and hopefully bring some price transparency to this market. And then I'm here today to find out what that kind of price transparency can unlock, both for empowering project developers and stakeholders on the ground, and what can it unlock for project origination and financing early stage.
Thank you, Alex. My name is Suhul Haile. I'm with Zylo Carbon. We develop and originate and develop large-scale blank canvas nature-based solutions projects, mostly in Africa. We were speaking a little bit earlier. I think what we are focusing on is essentially acting as the bridge between the governments and the communities in African nation states and the investor base in Western countries, and bringing together the skills that are necessary to execute on these very complex projects.
Thank you. Good afternoon. My name is Tobias Dorenkamp. I work for DEG, the German Development Finance Institution, and I work in the Natural Climate Solutions team and trying to build up a portfolio of natural climate solutions projects. My background is 17 years with DEG now, in investing in forestry and agribusiness projects as well as private equity funds, and hopefully coming to handy in order to find the funds and the managers as well the projects in order to build that portfolio. Thank you.
Thanks. Good afternoon. Pleasure to be here. My name is Edith Kiss. I'm Chief Investment Officer at We Value Nature. We are a new venture recently spun off from Systemic, also focusing on development, project development side. My background is on carbon markets. I've spent the last 15 years starting from compliance markets and trading, and then spent the last 8-9 years in impact investing, and just very recently going to the supply side where there are a lot of bottlenecks. So I look forward to discussing that and explaining more about our model.
Great.
Okay, good afternoon, everybody. My name is Adrian Anake. I'm a senior engineer with the European Investment Bank. Since 2015, I'm part of the bioeconomy division, so it's the technical department of the bank projects directorate in charge with assessment and monitoring of large-scale investment projects in the forestry and forest value chain. And just to give you a flavor about EIB, is the European Union Bank, the EU Climate Bank, and we finance about €1 billion per year in the last decade or so.
Thanks, Adrian. Thanks, everyone. So pretty diverse background, I think, from development banks to project developers to Flow Carbon, who's into the blockchain and increasing price transparency. So when we talk about project origination, I think when we were having a discussion between us, everybody looks at it slightly differently, right? I think a couple of figures. I think there's now, last time I checked in Vera, at least 1,800 different projects. I think even in the last few months, just 30 new projects are being registered, about 300 million issuances of new credits last year, 2021, and about 50 million retirements. So I think those are just some facts to show that there's a huge growth in the carbon market. I think we spent a lot of time over the last 2 days talking about biodiversity, monitoring, reporting, verification, carbon, plantations, etc. But I think it's clear that the last 2 years there's been an enormous growth within the carbon markets, which probably shifted some of the dynamics. So I think we're hoping to cover some of those pain points and topics in this panel. But let me go through the first question, and please share a little bit about where you think you are in the value chain when we talk about project origination, project development, because that might be different for every stakeholder. So Tobias, if we can go to you first, can you talk a little bit about what you mean by project origination and how you would approach it from KfW?
Sure. I think we come a bit from the end of the value chain, so to say, as an investor. So we would provide equity or debt to projects and partners. And so project origination for DG means that we look for good and reputable partners that we can provide long-term capital so they can invest in sustainable projects. That is project origination then for us to find these partners and to accompany them long-term, not only with capital, with technical assistance and all the means we have, but in the end, we are a financial investor. I think that is important.
Right. And I think, Adrian, although...
Yes, if I may compliment, I think we are on the same line. I mean, on top of that, as I said, we are a EU policy-driven institution. So first of all, in origination, we need to ask ourselves what kind of project we receive, because we are a project receiver, how this project is aligned with the EU policy framework, and what is the additionality and market failures that are being addressed by those projects. So there are a number of topics to be challenged. So we don't develop the project, but we support them as much as possible from the initiation phase. And I think, one other aspect is indeed we provide also loans and then equity depending on the type of promoter, private or public sector.
Right. And Edith, I think this is quite a different approach from how you originate projects.
Absolutely. So in order for you to receive the projects, obviously you need to have developers to make them happen. And currently, as we're running out of time, our mission is really coming in from a private sector perspective, but how to accelerate these proposals and also scale them and aggregate and make them investment grade, so the job of the investors are easier. So where we come from, obviously, is, again, as mentioned, is that we are a spin-off. We're trying to combine this scientific, technological, also building on all these technological advancement and what we discussed earlier throughout the conference. We need to find efficiencies, digitize where we can, and also, again, combining with the investment approach. So for us, really, we start from a scientific basis through our in-house spatial intelligence unit and really looking at the data and really focusing on the tropical belt. That's where we think the urgency, firstly, is around keeping our primary forests standing. Obviously, also restoration is very important, and you need to start working on that. But at the moment, we are focusing from the data point of view on deforestation and hotspots and where we can do these projects. Then we work with local implementing partners. Again, these projects are very much social projects. We'll talk about the social aspects and the local communities and the local stakeholders. So we still need to work with those partners on the ground. There are still capacity gaps there. That's not one of the gaps we're not able to fill. So we need local implementing partners on the ground with whom we partner in a JV. We bring all the carbon technical capabilities and provide this kind of early stage non-recourse finance, which is really hard to get right from the market at the moment, from our balance sheet, and then bring this project to feasibility where we can hopefully face the investors in a very efficient manner with a data room that is already ready with all our KYC and ESG standards suitable for the investors, and in that way compress that kind of bottlenecks on the market and aggregate and speed up the project. So we sit really in the beginning of the chain, but up to where we need the investor capital to scale these projects to the full scale.
Okay, great. So I think we'll talk about a little bit more about partners and due diligence and how you approach it between the different organizations later on. But Suhul, when you hear Edit, what is similar at Silo Carbon and what's different?
We are very much at the same end of the value chain, where we have a slightly different emphasis, is that we focus initially on the investor itself. So we go to the investor and ask them, what is it that you are looking for in a nature-based solutions project? And then we try and go to the governments, mainly within Africa, but opportunistically in other parts of the world, and try and get that for them. Because what we've heard repeatedly over this last couple of days is the question, how are we going to unblock investment into the nature-based solutions sector? And we think that it is by understanding what it is the investors are looking for. And if we can better understand what the investment will flow into, we can then go to the other end of our value chain, which is basically the communities and the governments within these countries, and essentially negotiate with them to give the investor what they are looking for.
Thank you. I think we heard from quite a few of your colleagues, Alex, about Flow Carbon and sort of what kind of product or solutions you're providing to the market. I think it's quite different how you look at project and project financing from the perspective of Flow Carbon. Can you talk a little bit about how you approach it?
Yeah, definitely. So how Flow Carbon is approaching it is really first approaching it from the demand side. So the platform we're designing is really going to enable this efficiency within the transacting of the credits, which we hope will then become a marketplace for this price discovery. And I think that relates to origination, because we really are at this moment now where there are a lot of intermediaries that hold this pricing data. And this is really important information to be able to speed up this process of not only project finance, but also giving local stakeholders this kind of information so that they have a seat at the table, they have some power to make these kinds of negotiations with folks like all of us. So I think it's two parts. It's bringing liquidity to the market that then can be used for project finance at these earlier stages. I think we're a long ways off from that now, but it's something that we're approaching now through tokenizing the forward credits, so unissued credits, and then it's the other part, data, and being able to collect that data and then share that data with all the stakeholders in a project.
Great, thanks. So if we move a little bit then from, we now know a little bit how you approach origination. I think we talked about due diligence or selection of partners. Who would like to share a bit of the steps required to go into a partnership or to find implementation partners for the projects you're doing?
If I may start, I don't think I would be in charge to say how we find the partners, but how we go through the due diligence. We mainly have two phases at the EIB. We have when a project promoter submits an application to us, it's fully flexible, there's no template. When we receive a project proposal, we first go into a pre-appraisal stage, which is the phase where we try to seek to screen in or out, depending on the proposal, the alignment with EU policy and the main public policy goals of the bank. So one of them is natural resource management, use and protection. We have environment, we have climate action type of projects. And then if this screening phase is passed, then we'll go into the detailed due diligence, which focuses on technical, economic, financial, environmental and social and procurement aspects. I don't enter into detail. It's a comprehensive due diligence with, let's say, months of work together with the promoters. I mean, depending on the maturity of the projects that have been proposed. And especially outside EU, notice that these proposals required a lot of support in the preparatory phase to present bankable investment projects. Our main, let's say, challenge, as Tobias mentioned earlier before, is to identify those projects that are investable, bankable. They need to pay back the loans at the end of the day, so it's not the type of investments which require grants. But I think we'll talk a bit later about the subject, but just to emphasize this need. So this due diligence phase can last between, let's say, 6 to 9 months, the shortest time up to 1 year or 2 years or even more. And thereafter, we would have the contract negotiations with the partner. But it's always a very dynamic process. So it's not that we receive a project and we can say, okay, we have a standard template and we check the boxes and that's it. But it's mostly a dynamic process, trying to align that project proposal with our, I would have to say, quite substantial and then detailed due diligence question.
Thank you.
So if I may add on to that, I think it's incredibly interesting to hear Adrian talking about that, because I think from our perspective, the developer needs to understand the inputs that are required at that stage, because they are our outputs. Yeah. And we can then work with them to deliver their inputs as part of the process that we go through in developing the project. Because we certainly have one financial services institution we talk to fairly frequently, and they were doing due diligence on 120 projects. And we think that's an incredibly difficult thing to do. And they really need to be, and most of those fail. They need to be focused in on a few large projects that they work with the developer and ensure get approved. And the way to get these things approved is to work with the investor to make sure they get approved. Yeah?
I see. Yeah.
So coming back to your question about who are the partners that we work with the partners that are credible to the investors. What sort of partners do we work with? Well, we work with remote imaging partners. We work with sustainable income development partners. Whatever, and that carbon consultancy piece to kind of validate and verify the project. Whatever the investor needs to get the project over the line is what we bring, and we make sure we work with the partners that they want us to work with.
Great, thanks, Ul. I think with Silo Carbon, you're pretty early stage, or you relatively recently started filling the funnel and originating projects.
So I work with two colleagues. They are highly experienced in this sector. We are in discussions with one West African country, which is beginning to get to a stage of agreeing a memorandum of understanding. There are multiple other conversations that are happening by the multilateral agencies of the UN to try and get the African countries to a place where they can get projects that are bankable to Western investors. And we work with them to get them to that point.
Great. I'd like to hear a little bit from Tobias, since you've been in this sector, I'd say, for a bit longer, at least in terms of due diligence and screening partners. Seen a change, or is there a difference in approach that you would take now screening your partners? Do you have to act faster? Do you screen for different criteria?
A very good question. Thank you, Lorenzo. And definitely, I mean, there has been huge change in the market. What I would like to point out, and I think that was very good with your explanation on the EIB, there are so many different types of investors and people suddenly talking to each other who speak also different languages. Therefore, your role is so important. No? So we have, even within the development bank or DFI community, it's a whole range of DFIs having different either public money, and you could talk about application to get a project approved. For DEG, for example, on the private sector arm, and we at KfW we have as well a public sector arm. We think of it as World Bank and IFC and very much smaller. We basically don't talk about applications; it's clients, no, and they don't apply to us. But basically, we have our 21 offices. We go out. We want to see the corporates, the companies we want to invest and support with capital. And so I think there are different approaches, and the carbon market is really bringing that all together, and different investors speaking very different languages. So traditionally, in my view, and happy if you correct me, but traditionally, most of the carbon credit projects were like developmental projects, right? Funded by philanthropic or government support. And that's the language many people speak and still do. And then now we are coming with, I love the first session. So you around yesterday, we have the asset managers, you know, coming from the plantation forestry side. And actually the private sector development banks are coming more from that side as well. So what we are used to for the last 6 decades, we invested in plantation forestry. We invested in processing. We did balance sheet financing. And we invest 10 million plus. So that's not the typical small-scale, smallholder farmer project. So, sorry, it's a long story, but I think it's an important point to say now both are moving into directions. Now with the voluntary carbon market now picking up so significantly again, had before, means we suddenly have price signals. We have volatility, of course, but we have suddenly a value to it. We see that in forestry plantations. Many of our clients before, or where we invested, they didn't care about putting up any carbon credits because it's not worth it at that point in time. Now suddenly it becomes a value. And obviously that's even much stronger the case where most of the return of a project comes from carbon credits. So now, yes, the demand is that DFIs need to do more in that sector. And I would just ask for some understanding that we are coming a bit from a different world, like asset managers now going from the very commercial projects, venturing into the carbon credit projects. And our due diligence processes are still very much connected to corporates, right? We do balance sheet analysis. We have multiple layers of very stringent due diligence processes on commercial, on legal, on E&S, on reputation. And you heard in some other sessions before that it takes some time. 2 years was a bit, well, apparently that was the case in one case. I would hope that we are faster than that. But so we need to change and adapt for the carbon credit projects. And just for DG speaking, we do have a little bit of technical assistance funding from the government, but these are really, I don't know, less than 5% of what we do. Most of it is financing from our own balance sheet. So we cannot just go out, spend money and hope as a grant. We need to see things as an investment. And that also drives our scrutiny on due diligence.
Yeah, so I think I hear a bit of the due diligence is evolving around the same criteria and concept, but the lead time is something that you can improve probably. I think that's probably for every developer or every forestry project with a long lead time. But Edith, I think you've gone through different cycles also before with Althelia, Marova, now with Revalue Nature. Can you share a little bit what you think of the current developments?
Yeah, happy to. Very interesting. I think we need to also see which segment we're talking about. So natural capital is still a very diverse set of, investment theme. Let's not call it asset class. I'm happy to call carbon as an asset class, but yeah, so it's an investment theme. So if you talk about, of course, different agroforestry, forestry, regenerative agriculture yesterday, emerging, but in carbon, they're very different. So I totally agree that we still need to work on the language, tailor the processes and all the different type of actors. What I have observed, especially in the past few years, is that when it comes to carbon, there is liquidity, there is price signal. When we started with Althelia in 2013, that wasn't there. So the market is actually much more agile, and our opinion is that the private sector is stepping up, and maybe the institutional investors are a bit lagging behind there, but definitely it's driven by the corporates, some hedge funds. So if you want to actually be able to even compete in this sector, I think, definitely on my sitting as an investor, I have started to pick up, and you could comment, not as a moderator, but as a panelist from the corporate side, that there is a competition. So our view is that on the carbon side, when you have the carbon as a business, as a main business case, I totally agree it's not the main goal, but it's a good tool we have, and in some landscapes it works. We believe that we can, with private capital now from our balance sheet, for example, Revalue Nature, we can accelerate them up to the feasibility study, and at the feasibility stage, hopefully bring an investable case to those type of investors who are either need the carbon credits or have a appetite to come in. Pre-feasibility is still difficult, I agree. So I think that's where I have seen personally a big gap. Struggle for investors to write those 100K checks, which would take the same 6 months or 1 year than a 5 million, so why bother, right? So we did have that discrepancies. And that's why I think actually some of the new entrants, like ourselves and other project developers, can fill the gap with a private sector mindset, because we need to have the local organizations, NGOs, project operating entities play a super important role, but they won't be able to do it on themselves alone. So the way we approach partners is, so we are mission driven. Our mission is to do the highest possible integrity nature-based solutions, carbon first, and also we'll work actively on biodiversity later on. And so we first look for mission driven partners. So for us, it's very important that the local partner has the same values. We'll be hopefully publishing our integrity framework later on as the company launches fully, because it's not fully launched yet. But that's the first step. And then, they have to have some capacity. We also agree that we need to systematize to scale. So ideally, if I do that kind of process with one project proponent, I also want to do more projects in the same country with these partners, also to bring back to the discussion from this morning, to a GNR, to jurisdictional landscape level. So that's efficiencies there. And then efficiencies on the investor side, that if hopefully I go through the investment KYC due diligence once, then I can bring hopefully quicker to the investors as well. So that's where we try to systematize and create efficiencies. And then the other thing is that there is still a lot of political risk. We might touch on that. Obviously, these countries are very difficult. So we ideally also work with local partners who have some sort of relationship with the governments to be able to input, help also support these national strategies, because that's, again, we can talk a little bit about that, where I think there's a need to have the capacity building is still lacking to be able to implement these projects. So the way we think this through is that working with the local partners, also inputting into those national strategies, so bring those global experiences and across the continents share also those best practices.
Thank you. Thanks, Edith. Yeah, and I shouldn't participate too much in the discussion as a moderator, but I can definitely confirm from Shell's perspective, there's been huge dynamics and increased competition over the last couple of years. So I can confirm that. If we jump a little bit, Alex, maybe to you on moving away from partners, but more to the either investor or customer side. And I think, again, we need to define or frame a little bit what we mean with investor and customer. But can you talk a little bit about how you try to link both of them, or who your customers are, and how you select your product essentially to tailor to the investors or customers' needs?
Yeah, so it's right now it's two-part. We have customers on the supply side who want to bring credits to us and tokenize them to realize another path to liquidity through our platform. And then the other part of our customers are potentially going to be not only corporates, and we had talked earlier about how do we maintain quality when it comes to corporate customers. Are they actually decarbonizing? How do we monitor that? And I think that blockchain technology is going to offer us the ability to automate a little bit of that through smart contracts. And then the other customers we have are retail investors who have never had access to this voluntary carbon market, and potentially could be, we're not sure yet. This is the very beginning. We're trying to explore whether or not retail investors make sense, but it's a new pocket of capital where maybe they have an appetite for risk that's just not currently there. Potentially could come in earlier stage, especially if we're applying these tokenization of forward contracts. And we just don't know, but the customers for us are both on the supply side who want to now have access to these tokenized, more efficiently traded assets, and then on the buy side, it's going to be mostly retail investors and traditional corporates who maybe are entering the space and are not wanting to go through all these hoops, these traditional ways to go and access credits. They want to do this more efficiently, and so yeah, that's where we're coming at this from.
Right, and what kind of bottlenecks do you experience right now then too?
Bottlenecks now is getting people to understand that blockchain technology, just getting them to understand how to transact with blockchain technology, using a wallet. I think that's one piece of it. It's a language barrier, I would say. But I think that once we've run through some pilots with folks, we've experienced this with several corporates, they tend to be more open to it. And so that's a process we're working through now. But I would say that's a major barrier for us.
Anyone else who experienced similar or different bottlenecks?
Yeah, well, if I may, I mean, of course, our main, it depends very much on the type of the project promoter. I mean, are we talking about public or private sector? Are we talking about, inside or outside the EU? So that's the first layer of differentiation. So we had experiences with very, very qualified corporates and SMEs and mid-caps that we are financing very well, including governments. But on the other hand, you have situations where, regardless if it's a public or private investor, the projects that are reach our table are immature in terms of structure, so in terms of project description, then governance model, and then financial model and paying back of the loans, and also with issues regarding to the implementation and monitoring. And this we heard over these 2 days how important it is to have close to real-time monitoring and implementation. So I would say how we try to address this is, for example, to provide to work together with the European Commission. We are part of Team Europe outside the EU, and we try to work on the origination and initiation of projects on the so-called Team Europe initiatives, where some key thematic areas under which forestry can be, depending on the country, can be can be an important topic. There we work together with the Commission to provide blended financing, let's say, a little bit of support from the Commission in terms of grants, and from the EIB in terms of loans or equity, depending on type of promoter. We also have, I think we had Petri here who presented very well the case of Forest for Future facility, for example, but this is it's a small facility that helps us, and we appreciate quite a lot this intervention when we have specific case studies or specific projects where we need immediate, let's say, immediate TA assistance for passing these bottlenecks at the preparation phase of the project. And we hope to develop further. I mean, we have also in plan to launch a EU-wide forest advisory program just for scaling up this kind of investments within EU. So
thank you.
Stay tuned.
So I can imagine, so you're talking a lot about Europe and the EU. If we go back to Suhul, I think that's quite different than African governments or African dynamics. Can you share a little bit how you do that?
Yeah, absolutely. I mean, the bottlenecks in the African context is the capacity to get this stuff done. There is the technical skills simply do not exist, and even if the technical skills existed, the contacts into the investor base don't exist. And Bas was talking about the bridge between these two worlds. We're attempting to be exactly that bridge between the investor base and the African governments. There is one point that I'd really like to make, and I think is really quite important, and I don't think it's been made in these last couple of days, which is what we have seen, I don't speak for anybody else, over the last period that we've been involved in this, and my partners have been involved in this far longer than I, is that projects get developed from the ground up, by which I mean people identify existing development projects or maybe parcels of land or parks authorities or things like that, and essentially try and develop a carbon finance project on top of those. The issue with that is implicitly that implies that capital is unlimited. What you're saying is, yes, there is a viable carbon project in this particular area, and if I bring all the skills in the investor base together, I could get something done there, but there could be a much better opportunity 100 miles down the road. And where that is important is essentially the carbon market remunerates us to have the greatest environmental impact. But the greatest environmental impact actually maximizes revenues not only for the investor, but also for the local community and the host government, and actually also has the greatest environmental impact. This should be a win-win done correctly. So I think we think that really the first step has to be in helping these governments identify which areas within their countries are best suited for carbon credit generation projects, and then develop the projects. And I think where we are trying to have a slightly different approach is to help the governments bring the skills that are required to enable the governments to do that analysis, but then bring all the skills and the finance together to get it done.
Very interesting top-down approach. I'm going to challenge this a little. I hope actually that Edith is going to challenge this a little bit from building projects instead of top-down, more bottoms-up.
No, I totally agree in the sense that that's what I meant by science-based. So I think we need to move away from, opportunistic is good, and there are, again, these are challenging contexts. So some people have been working on a landscape. Of course, they should look at, right? And also putting all the pieces of the puzzle takes a lot of time. And coming back to your point, it's still the very early stage. It's still a grant and development. It's a development project because when you start from, so even where we intervene, it might take 2 years before I bring it to the investor. They already been working in that landscape, or there is already preparatory work. So it depends on how far you go. But I totally agree. For us, the market also to scale, we need this scientific and evidence-based approach, and that's what is super exciting with all these new technologies, which is really hard to follow as we discuss. There is every week a new solution coming up, but it's the bottom line is there is now data, this Earth observation and remote sensing, and you can do that. So for example, we have been mapped out the whole Indonesia and all the concessions, and are able to say which concession is more suitable to your point. So it's not a random kind of selection. Of course, there will be other barriers. Can you buy that land if it's a concession, or can you, if it's community, you have to do full consultation and make sure. But I agree that we need to move to this more systematic and scientific approach to go to scale, and also to pick the best places for these projects, because we can't do everywhere a red project for sure.
So this is probably from the say, project developer or top-down approach,
Yeah.
a very systematic approach, as you say. But how do we integrate social values, or how do we bring the values from the communities and bring them benefits, which they don't care about the broader system. They probably don't even care about the carbon markets, but they do care about impact. And talking with you as a developer or an NGO or an investor, they might have quite different drivers. So how do you integrate those social needs?
Happy to jump in on that, just to start again from the bottom. And again, I think as you move down the value chain, your leverage and your type of checks, it's different. And IFC performance standards is very useful for, I guess, for investors a bit more down the line. But I think it's very important from our perspective that the social side shouldn't be looked as a co-benefit, or it's not like a box, like a box nice to have. These projects, especially RED Plus, the type of avoided unplanned, where you have actually drivers of local drivers to deforestation communities, is our social projects. There is 1.6 billion people living within 5 kilometers of forests, and of which 65% in tropical belts. So these are, whether you like it or not, you have to deal with that. And so from our perspective, it's really looking at, again, science-based, understanding the drivers of deforestation. Actually, there is often local drivers, but sometimes also these are misattributed too much to the local communities, while actually they are good guardians of the forest in most cases. It's just some other external factors. But basically looking at the drivers of deforestation and looking to know how to address that. So for us, it's like looking at the stakeholders. Sometimes they are actually outside of your project boundary. I've been working in my previous role in national parks, where actually the drivers are coming from outside buffer zones. So you need to have a really large landscape and identify that. And we just basically, do the full kind of stakeholder consultation. And FPIC is also another thing, is it's not like a box ticking like, okay, yes or no. The way we view it is a continuous process and continuous working with these people. And you know, that at the end also the benefit share, which again touched upon a little bit, we need to have much more transparency. We need to make sure the revenues, most of them flow back there, because otherwise you will have an issue with the permanence as well. So it's a kind of, can be a virtuous cycle if you do it right. But from us, it's not like a co-benefit that you just get a CCB label. It's really the base, the core of your project. But I would be happy to hear how you view it a little bit further on the chain as well.
Yeah, sure. I mean, I would echo all what you're saying. I think what I would add, and that's also learning experience from an investment last year we did, is, I mean, DFIs come from a risk perspective. We very much see environmental and social as risk and how to mitigate and to control them, right? So that's why we perform very strong due diligences. Every investor or any corporate we invest into needs to get to the IFC performance standards, and we do a gap analysis, baseline, monitoring, controls, so a lot of things. So what we learned with the first investments in carbon credit projects was project developers really putting out there all the benefits, which is great, and which we have a developmental impact assessment, which and all the indicators we get from our projects anytime. But I mean, that is the main topic of carbon credit projects. It's social projects at heart, right? And therefore, obviously, you need to put forward and to incentivize these, which is important and key. What we were missing a bit, and maybe that's something DFIs can bring into the equation, is also looking at the risk side of things. So you are hugely impacting a lot of communities in many of these projects, in RED Plus and other projects. And yes, there are a lot of benefits you're creating, but it's not all benefits, right? Some benefits go more to the one and not to the other. It can create conflicts. It can create many things. And to control these topics with the standards and methods and toolboxes we have at our disposal, I think they're already widely spread, but not everywhere yet used. And I think when you said rightly so, corporates are fast at the moment probably entering the market. Well, I would argue that, although I think in the earlier panel you said it's not in CSR investment, for many corporates it is at least an expense, not an investment. So entering into carbon credit projects with a very different mindset and DFIs and asset managers coming from the investment side of things have a different perspective. And I think DFIs can build the bridge, and we need to enable both to bring the capital to the market.
Yeah.
And that's my hope, that we can bring that to the table. for DG 6 decades, for other DeFis a bit more,
Yeah.
62. In these markets, bringing also the safeguards, because in the end, all carbon credits projects, unless you tell me otherwise, are reputational investments. So really having the risks really clearly defined, the baselines and everything, and not just the carbon baselines, but all biodiversity, social, and then the controls implemented is really key to any success.
If I may just add 2 words, or a couple of words in complementing this, I mean, and I try to be short. So just from an EIB perspective, I mean, environmental and social externalities are one of the main drivers of EIB investing in the sector. So we take it as a challenge, as a risk, but we have an environmental and social framework which includes policy, E&S policy, and E&S standards. So we have 11 standards, out of which 5 or 6 I can name them: stakeholders engagement, involuntary resettlement, vulnerability groups are part of our strong due diligence. And when I'm saying that, I mean, in the phases of due diligence, as I said, I mean, we receive studies, stakeholder engagement plan, environmental impact and social assessment, and so on. We check them, we scrutinize them, and when we go on appraisal missions, we stay and then talk with the local people. Not only with the cooperatives, I mean, because, or not only to the high level, let's say, project developers, but also with the real people which are affected or impacted by the projects. And we try to understand, you know, what is their involvement. I mean, are they, I mean, benefiting of fair benefit sharing mechanism? Are they contributing voluntarily into the project, and how they are involved, you know? And whenever we identify an issue, we try to correct it with the so-called mitigation actions and plans. But it's yeah, I would say it's one of the most detailed part of the due diligence, which, as Tobias was saying, maybe that's why we also cannot be so fast with the private sector in terms of finalizing due diligence and then and then go to a decision to finance a project, because we need to scrutinize every single element.
Thank you for summarizing. Yeah, thanks for adding that, Adrian. I think I like how you both summarized it, saying, look, it's on the one hand risk management, and we looked at it from the ESG risk management approach, whereas actually carbon projects, typically, or nature-based projects for sure, are much more built on community values and enhancing social values rather than the risk, more the opportunity to find projects that are that actually bring those, and more like a leading indicator rather than managing reactive. Sul, I think you wanted to add something?
Yeah, I cannot stress enough how political land use is in the developing world. I mean, in an environment where most people get their income through agriculture, land use, especially at scale, is incredibly political. And I think as well as FPICs and having that kind of discussion with the community at the lowest level, you also need to have that kind of the discussion at the highest level. And you know, from a developer's perspective, you know, we're in discussions with one country, and they're talking about essentially passing through legislation to ratify land use changes within particular areas of their country. And you know, it's incredibly scary from our perspective, because that's likely to take an incredibly long time and has very uncertain decision. On the other hand, should you get that through, well, you know, what else could you have done?
Right. Maybe before we, do you want to?
Yeah, no, just I agree. So that's what I meant with the stakeholders. You need to have all those different layers, and frankly, also we need to just accept that sometimes the communities might refuse. So again, it should be really an open, and it's not like, again, a box ticking exercise, or again, once you are down the line, you want to make sure it was respected. But what's what also I hope that, I think for the market to grow and scale, we need to professionalize a little bit and make sure that by the time it arrives to your desk, you don't need to worry about that. But I totally agree with you that one of the things is, using IFC performance standards. Ophelia, I think, was one of the first ones, thanks to EIB and FMO and all those early supporters that have brought that in from the developing and finance world to the carbon markets. I think it's super important to leverage in all those levers. But hopefully by the time if we want to scale, we need to make it more efficient and make sure that your due diligence doesn't have to take 6 to 12 months.
Before we move to questions from the room, Alex, I'm not sure if this is some of those criteria are the way the social and community values are either identified as risks or opportunities to select projects. Is that something that Flow Carbon looks at as well?
Yeah, it's something that we're thinking about right now. Is how do we ensure that the right kinds of projects are getting the funding? And so it's something we're thinking about now, and that's part of the reason why we're here. We're listening to these conversations, and we're, you know, I could play moderator here and ask the same question to you. How do we fit that into something like this kind of platform, and how do we make these projects that are also very risky and have these other very important social benefits become eligible, and not just eligible, make it into this kind of a platform where we're able to get funding to them. And so I think it's one thing that we're, like I said, we're thinking about it now. We're really just trying to figure out how do we create some kind of an additional standard to eligibility for projects that receive financing through this kind of mechanism, and then also are able to be traded on our platform too. So
I think we'd all look forward to see how you translate that in the end
I'm
into
sure,
your
yeah.
project and for people to access and quantify it. Any questions from the room? I don't know how we're doing for time, but I think there's about 10 minutes or so left. Haley, is there anything online or in the room? I don't see anything on the screen. Does it mean there's nothing online?
Thanks a lot. Could you talk a bit about alignment of interest? Because I don't think that's something you've really covered yet. And I think it's a really important thing in order to integrate the kind of origination side with the investor side. And for you, as a panel of sort of people that have covered that, what are the mechanisms that work and that we should be looking at going forward on that?
Do you have someone specific in mind?
You at BP and maybe Tobias might have some perspective on that.
I'll pass it on to Tobias.
Directly?
Yeah.
Okay, sure. Well, alignment of interest is key for us. We are quite experienced in investing in private equity funds where this is always centerpiece, right? And typically it goes with carry structures and, well, basically incentivation of the managers who operate portfolios. And that's the point of, I think for us, we would definitely increase significantly our investments in NCS projects on the plantation and forestry side, forestry plantation side and agribusiness side. That is a business we know, and we will increase that significantly. We also want to now start up and increase, well, we have done a bit of investment, but increase significantly as well on carbon credit side. But how to get, as an investor, these investments done? My personal view at the moment is that we need to find the right partners and also create portfolios. It's about risk diversification. It's not only us. We are always minority investors. It's not us investing in any project and doing it ourselves. We want and need to team up with other investors. And therefore, we need also to convince them and us as well that risk diversification is there. So create a portfolio of projects, and someone needs to manage that portfolio and manage the projects. And we are, as the other investors, are financial investors. We can't do on the ground. That is you, Edith, and others who do the work on the ground. And yes, we need to incentivize them in the right way. What is the right way? I've seen different models, and the more commercial side, it's always about money. But we have seen now in the carbon credits phase as well, there are social enterprises, there are others, so it's not always about money. I think we are open to any solution that works for both sides, and it's a discussion process. We don't have any set agenda, it must be that or that. But what we look at, is really, how are the people running it, are incentivized and motivated? And it's not, again, not only financial. We need to see the mission, and we need to see the engagement and motivation, and also, to keep there for a longer term, not for just 1-2 years. No. So that was a long answer, but I hope it was helpful.
Yeah,
For the management, you mean? Then, well, what I've seen and what I like, but there must be other options as well, is sharing the carbon credits, no? And basically, and then you don't have to wait 30 years for the carbon credits. Typically, though, there is. No, it does, and which is a nice thing as well. You can receive money for 30 years, no? But only probably starting in year 7 or whatever the first credit period is. but it would be basically the investors sharing very much from the beginning. Probably not entirely at the beginning, or but to an increasing amount to the later stage of projects, but to the later time of the project. But that's really a discussion and negotiation process.
I think, Edith, you want to say something? And then
Yeah,
Suho?
totally. Just to echo. So yeah, so for example, from a project developer perspective, our approach is to enter into long-term joint ventures with these partners for 30 years, provide all the technical services. So it's also like for us, because we provide it in kind in-house, it's the controls and the quality, and we'll be there for the MRV, for the monitoring for 30 years. And will be paid, as you mentioned, as a share, so it's fully aligned, because if it doesn't work, we don't get paid, they don't get paid, nobody gets paid. So I think you can, with the revenue share, profit share, all those models, but you're right, it can't be done in a less and less, I think, on a consultant basis, and also the fee basis. It's better to do it as a principal and joint ventures. I think that hopefully should solve it.
I think that question about who is going to be the operator of these projects is absolutely crucial. And obviously crucial for the investor up front as well, right? You know, if they're investing in something which has a 30-year concession, they need to, like you said, need to be certain that it's going to run for 30 years. And you know, the reality is, I don't know about Edith's outfit, but you know what, a startup like us, there's some very experienced people around, but we're still a startup with next to no balance sheet. It's not credible to have a 30-year horizon. So you know, the way that we're approaching is inevitably we're going to have to team up, partner, with either government agencies or, let's say, UN agencies or NGOs, possibly not even corporates on the ground in third world countries, right? Because who knows if they're going to be around for 30 years. Like Tobias says, absolutely, you know, the one benefit of a 30-year concession and 30-year flows is so long as the carbon credit prices hold up, there is revenue to ensure that the activity is paid for. And you would hope that the activity gets done because it's paid for. But you're absolutely right. Somebody needs to sit there and manage it.
If I may just add something from the EIB perspective, indeed, I mean, we are also, since a decade, part of providing equity to specialized investment funds. So we talk here, the first one we had, Alteria Climate Fund, but then we went to dedicated forestry timberland funds. And land degradation neutrality fund, it's an example of combination of sustainable forest management and sustainable land management type of projects, where indeed our role is to come through the due diligence to scrutinize the investment strategy of the fund and to provide a catalytic and then effect to the markets to crowd in other investors to come. Of course, we cannot, as an institution, public institution, we cannot provide equity in evergreen funds, so we need to have also an exit strategy. But the strategy itself needs to be based on really clearly defined international best practices, and we need to ensure that technical capacities are there with the fund manager. And as Edith was saying, I mean, there are some other project partners that can continue and follow up after the exit of the fund, but we need to ensure that these things are remaining on the ground.
Thanks, Adrian. So I think you sort of answered the question that Ed Stiles asked online, whether development banks are able to step in relatively early, since historically they would come in much later in the value chain, essentially, right?
Exactly. I mean, even here, I may say again. I mean, these questions and these discussions here, they seem to me very focused for outside EU operation. I mean, not necessarily for inside EU. Inside EU, you have much better prepared projects, let's say, or at least much more focused, and with how to interact with the local partners. But when you talk about carbon forest, carbon projects, in EIB jargon, it's mostly sustainable forest management projects. So the carbon benefits and then the other benefits are co-benefits. We are looking to the sustainable forest management and international best practices compared to the baseline. Why do we intervene? Again, we need to justify the public intervention of the bank, and we need to compare everything to the previous situation without the project and what the project can add up on that to change, as simple as that, to change from, classic forest management or no forest management at all towards digital systems and then GIS and remote sensing into the forest management system, or just developing forest management plans in projects that normally it was not the case. So this is the, let's say, baseline scenario approach that we are applying in our projects.
Right. So I hope that answers Ed's question, who I know has been involved in forestry and agriculture projects, I think in sub-Saharan Africa himself. So I see one more question there. Yeah, we have about 5 minutes, so I think maybe 1 or 2 questions.
There's been a lot of talk about bottlenecks, but again, but bottleneck is in investable projects. By investable is so there are a lot of projects out there that would be feasible under different circumstances. One of them being higher carbon price. So more than likely, a higher carbon price supply is going to catch up in the next 5 years. So when that price comes back down again as supply comes online, the focus goes back on transaction costs and monitoring costs. What changes can you see happening, or what changes do you think need to happen over the next 5 years on the deal side, on the execution side, that you think bring as much supply online as possible for a lot of the smaller projects?
Okay, we have to be relatively brief in the answer, so I think
Can
focusing
I
maybe
take
on...
that one?
Go
I
for
think
it.
there's a business case. It's incredibly interesting. We had this exact same conversation with African government, who were trying to tell us there was no business case at the current carbon price. We think there's an incredible business case at the current carbon price. I think the second part of your question, it looks like you're foreseeing prices rising and then maybe falling later on. I don't know about you, but this entire conference has basically been saying there's a paucity of nature-based solutions projects. At least there are others, cook stoves and things like that, where there is quite a lot of supply, and maybe blue carbon was mentioned a little bit earlier. But if I look at the numbers coming out of the IPCC, I would say there's an incredible undersupply. Thank you.
Yeah, so
We have agreement in the room.
yeah, so I think that there is
You agree or disagree, Edith?
there is a huge potential. So yeah, I think that what we need to do is there is a huge mitigation potential for nature-based. That's why we are so excited how we bring that out. There are bottlenecks, and that's what we need to also, and a timing issue. We need to speed it up, because if we wait too long, then the forests are gone. So I think, to your point, I do see it's a bit of indeed, it has its cycles. But yeah, I think we all agree that there is a business case. We just need to work on it, and we did discuss a little bit in the conference on biodiversity. There are landscapes that the carbon is not going to work at all, or maybe at a really high carbon price, but if you stack on it a biodiversity attribute and impact, maybe it works. So there are other ecosystem service payment mechanisms that hopefully will catch up and come, but I agree that there is a potential, and what we need to do collectively is speed up and compress those bottlenecks. So that's we are hopefully all working on right now.
Good. Last question. Where's the microphone? Oh, it's over there.
Right. Could I ask a quick
Two more
question? So I'm coming at this, and thank you to the panel, and thank you largely to this room for what you do actually in your everyday life. I'm coming at this from the outside the industry perspective. I come from the asset management industry, and my day job is to allocate capital to fund managers, to innovative fund managers. We're not a polluting industry as a whole. However, the big question and the big challenge has arisen for us is in the underlying portfolios that we hold, right? As in the pollution or the carbon footprint of the underlying companies. That's a big challenge, and we don't need to discuss that today. But my direct question is, we are looking to go to net zero. We are looking to offset. However, we're also looking for impact and social. Is there a best practice, or is there one or two leaders in your industry who can do this through perhaps 10 million tree type projects, ideally 10 million fruit tree type projects, where we achieve carbon offsetting, social, and impact? Could you share 2 or 3 examples perhaps? That would be super helpful to the whole of the asset management industry.
Thanks for the question. Yeah, and I don't think you refer to Shell when you're talking about so I won't take it. I won't take the question. But any who would like to?
Yeah, if I may. I mean, I just try to give a simple example. So as we were talking before about these blending instruments, I mean, together with the Commission, we had, actually the Commission developed this instrument called Natural Capital Financing Facility, under which we have been investing in projects targeting ecosystem services and biodiversity. And one of them, it's SLM Silva Fund. So it's a specialized forestry fund in Ireland, which invests in a conversion from clear-cut system to continuous cover forestry and close to nature management. And this type of, let's say, transition towards continuous cover forestry and close to nature forest management addresses both the keys, the aspects regarding, carbon storage and biodiversity and ecosystem services, on top of the, let's say, financial return that we are expecting. So I hope this could be seen as a good example.
Really final question now.
Yes, so what we're going to have more and more is a lot of interesting opportunities for people wanting to do a project. We operate in Brazil, where there's 500 million hectares of forest still, and 220 million hectares of arable land. So there's a lot of opportunity. But especially in this time of the market, our time is very valuable. So what would you think is the best approach, and what will be like immediate cutoff points seen from a technical and an investor perspective?
Alex, you want to?
I don't know where to start with that one, to be honest.
Sorry to put you on the spot. Anyone else?
Yeah, I fully agree. Brazil is a huge opportunity. So from our perspective, again, go back to science. The top 3 countries where we have to really focus is Indonesia, DRC, and Brazil, if you want to save a tropical forest. So where you start with, you need to see where, Brazil hasn't been the easiest place to operate, but there are plenty of projects, there are opportunities, and you need to just have depending on whether it's a restoration project, whether it's avoided deforestation, have all the technical baseline and see whether there's a feasible piece of land and community owned or government and just bring it together. But you have a lot of opportunities there, I fully agree. And that's where I think hopefully the new project developers, as we discussed today, can bring in and come partner with local entities and help you find the best spots and operate those projects.
All right. I think we're out of time. Haley, do you want to?
Yeah, I'm just actively avoiding you all standing up and running off, and then me awkwardly being like, guys, come back, let me close the session. So thank you for sharing, and thank you for a fantastic panel.